What's going on, studs? How is everybody? Guys, welcome. It is a pleasure to have everybody here. Awesome. How is the audio? Good. Mr. Fifi, how you doing? Mr. Helmner, how you doing? Oh, sweet. Harsh, how you doing? Whoa, Ben, what's going on from England? Good. Let me know. Let me know if this is your guys' first time in here. Let me know where you're all coming in from, and let's get this party started. A lot of Canadians. Good to see. We're all some fine people. Awesome. San Jose. Jimmy, pleasure. Nepal. Holy moly. Very cool. Denver, Kansas City, awesome. We got people from all over the place. Well, guys, welcome. I know for some of you guys, it's your first time, and some of you others, you guys have been with us forever, and you're continuously in these bad boys. We're going to have a fun time today. You know, we're on 8 o'clock Eastern time here, so it's about that time to get started. And I really thank you guys for coming in, and bear with me as we've got a lot to cover today. So a little bit about what we're going to talk about today. As you guys have probably seen in the stock market, there's been a lot of ups and downs in the last about 1 month. Same thing even in the cryptocurrency market. So those are the two markets that I trade predominantly. Cryptos, which is like your Bitcoin, Ethereum, and then the stock market, which is, you know, everything, your Googles, Apple, small caps, big caps, whatever it is. But in the last couple months, we've seen a shift in character from 2017. In 2017, the market was easy. You know, 2017, what was happening with the market was just an epic bull run in all different types of names, but also in all different industries. You saw the run of a lifetime in the stock market itself. And then also you saw a run of a lifetime in numerous things like actually Bitcoin and Ethereum and so on and so forth. So guys, it's been really cool to just have like this kind of little bit of shift in the markets, because nothing's ever the same forever and nothing's ever fun forever. And so what we need to do as traders is always be looking to trade both ways. And so one thing to kind of keep an eye on is, you know, this was 2017 in the stock market where, you know, we essentially had almost about a 30% gain there. But the other thing was just the structure of the stock market. Do you guys notice that? I mean, the market really beyond just a few red days, it was up pretty much every darn day, which is impressive. I have been trading for 15 years. And one of the things to really think about is in all my years, I'd never seen a market that just went up a little bit every day like that. It was an incredible run. And you saw that across the board. It wasn't just in the stock market, but it also was in cryptocurrency. Essentially what happens when the market gets like that is it's a risk-on market. Risk-on market means that just everybody is buying and the market is ready to go. And you saw this, you know, I'm sure a lot of you guys have heard the term Bitcoin before. Well, we had the same kind of thing even in Bitcoins, where you had the run of a lifetime, right? People were getting stupid rich off really doing nothing. And that's the fun part about the markets. There's always something going like this where, you know, you can get a 5x or 10x return, and it's an awesome thing to do. That 2017, you know, we started trading this stuff in the beginning of the year, and I mean, you just saw really like this incredible movement. This is Ethereum, which is another coin that we use. You know, this thing went from $3, $4 to $1,400. Same thing with Bitcoin and Litecoin, and it was game on all year. But then as the new year started in 2018, it's been that in reverse. The whole market has come crashing down, and there's been tons more volatility, a lot more risk in the markets, and all the people that bought up here got excited about the Bitcoin. They're underwater, and not only are they underwater, but they're down a lot of money. And so how do you handle trading when the market shifts like that? And the same type of thing happened in the stock market. Once we had this epic run for all of 2017, the sentiment shifts. As with anything, winds shift all the time, don't they? And so now what's been happening is, well, this year it's been timber all over the place, and the market's been just, you know, one up day, one down day, but a lot of volatility. That slow market that just went up every day, where you could open your portfolio, and you would just be up a little bit of more money every day, has subtly and aggressively shifted into something that's a lot more volatile, that has a lot more risk, but also is just a little bit harder to trade and requires different tactics and different techniques. And that's going to be something that we've just got to be really mindful. But the beauty is this, you know, when the markets shift like this, we shouldn't be able to make more money than even when it's going up, if we're able to use a handful of really good patterns and techniques, and we're able to spot these things just off to the races. And that's going to be something that we'll be talking about today. So let's get down to a little bit of work here. So for those of you guys that don't know me, I'm the head janitor over here at Bulls on Wall Street. I've had this company since, boy, I can remember. I run the company with my four best friends from grade school. We've all known each other for, since we're 8-10 years old. And then I have 8 other employees that are all former students of mine. That have different talents in trading, marketing, all different types of things. And so we've got an awesome group of friends and students. And, you know, here we are, a little bit about it today. So as with everything that we do in any webinar, you know, we had 2 webinars today. So I take all the people. At the end of the webinar, I'll be giving away a free trading boot camp. And we'll be giving away 2 passes, which is just access to our chat room. So I have a cryptocurrency chat room that I am in all day, trading and putting in alerts and, you know, all this kind of fun stuff. And it's a great group of people. We've been literally just murdering it. That's probably a poor choice of words, but we've been slaughtering it in the last few weeks in cryptocurrency with some big winners. That's my thing. You know, no good markets, bad markets, up, down. It's all the things. So I'll be giving away a password. We've got a great group of people in here, 264 people that are always just chit-chatting about cryptocurrencies, and they're fun. You know, they're knowledgeable, and we have gone down. So wait till the end. We've got a fun group of people in there. I'll be giving you guys a pass into that, and man, you guys will have a lot of fun with it. The other thing that I will be doing is giving away a 60-day trading boot camp, which is you know, my flagship lifeblood of everything that I do. 60-day trading boot camp. Probably a lot of you guys are asking, why the heck would any trading class be 60 days long? Well, I've done a lot of studying in my life, good and bad studying. And the one thing that I have noticed with trading is that it cannot be learned in a few hours. It cannot even be learned in a few days. It can't be learned in a seminar. And it sure as well damn can't be learned in some streaming DVDs or some YouTube videos. And 100% you won't learn anything from books. Trading is a high pressure, high stakes job where you have potentially hundreds, if not thousands, or even millions of dollars of future earnings and risk on the line. To get to where you gotta go, you've got to learn the process of trading from the beginning, the nuts and bolts of it, and build that foundation. And then you've got to really build on that. And so that's why our course is 60 darn days long. It's intimidating. It is not for everybody. I've even had a couple of people win the 60-day boot camp and not even really go through with it. They're like, damn, this is a lot of work. But the awesome part is once you're done, imagine where you could be in 60 days from now. Once you're done, you will have a tactical edge in all things about trading, you know, and so it's total immersion. You will have a tactical edge against even people that have been trading for a good chunk of their lives, because that's what I do, right? We're taking everything that's in my brain and giving it to the students. And so it's really, really hard, but it's worth it. You know, it's worth it for a long time. I struggled with trading for a long time. I only became a full-time trader at the age of 28. So I've been trading for 27 and a half, but I've been trading for quite some time before I really got the groove of it. But if somebody had told me, man, you're going to have to spend 60 days taking class and then months after perfecting and practicing and on a simulator and getting everything down, but then you're going to be able to do it for the rest of your life. Well, now that sounds pretty cool. In the moment, I've been like, damn, 60 days, a lot of time. I got things to do. I got things to do, right? But in the end, we always find out, you know, as you go through the years, ain't none of us really ever have that much to do, right? You know, we have no time but today to really get moving. So I'll be announcing at the end of this class from anybody that was in the first two webinars who's getting the chat room access and then who's getting the granddaddy, the 60-day boot camp. And that covers everything. Our 60-day boot camp, you'll have access to our chat room, unlimited retakes of class. They're live classes, of course. You'll have lifetime access to everything. So you'll be in with our team for forever. And so that's going to be pretty darn cool. And that's just something that I think you guys are going to like. So wait till the end on that one. I won't bore you with too much fluff. I know, you know, I've been to all sorts of webinars where, you know, that's just like, what if I told you that I could give you one secret today on how to lose weight? And you're like, you're like, yeah, cool. Give me this fucking special trick, right? And then at the end, it's like, damn, that really sucked, man. I just went through all this, guys. I went through this asshole slides for 2 hours, and I didn't get anything out of it. So what I try to do with these webinars is condense them down so that we can learn one specific thing. For those of you guys that were in our last group of webinars, we had a totally different subject. And I believe that's on our Bulls on Wall Street YouTube. It was like 2-3 hours. So you guys can feel free to catch up and go to that. So topics for today, we're going to talk about 2 of the best short selling setups that I use in the stock market. You can also use this in cryptos. You could even use this in futures if you guys trade futures. I've used these type of patterns in any instrument around except Forex. I hate Forex trading. I always found it to be a little bit of a scam, but I like all other types of trading. So that's going to be, we're going to teach 2 of them. One will be a day trading setup, something that you can use on a short-term basis. You know, you might hold it for just 1 day, or even sometimes for some of you guys who are in my chat room, you see, right? Sometimes we hold these things for like 5-10 minutes. You know, if they explode or they go the way we want, then, you know, we end up taking our profits, because there's nothing better than just having like a 20-minute workday, right? If we happen to get lucky enough for that. The other part that we'll talk about is how to calculate your position sizes in really volatile markets. So the market, because the range is expanding right now, there's more volatility. And so it opens us up for more risk. And so that's going to be huge. And so what we need to do is size our positions a little bit better so that we're really always focused on managing our risk, managing our risk, managing our risk. You know, that's one of the things that you'll see with me is that you rarely, you know, no matter how much money I have in my accounts, you will never see me really lose more than $1,000, $2,000 in a day. Like if it's a really awful day, I'm really, really good at managing my risk, but that took a lifetime of, man, not managing my risk and learning all sorts of painful lessons before I got into it. So we'll talk a little bit about that. And then I don't even know what an AMA is, but my intern, Nick and Josh, they're youngsters. They're like 19, 20 years old. I love getting good, solid interns that like to learn about trading. So I always cut them a deal, right? I'll show you how to trade and you guys make me these slides and do other stuff. But I think we'll just call that question and answer because I don't even know what no AMA is. But whatever it is, we're going to be doing it. So before we get started, if anybody is brand new, they've never even traded before, this might be a little bit over your head in terms of it. It's going to be simple enough where you'll be able to follow along and learn it. But if you've never traded before, you might not even have an understanding of charts and the basic terminology of indicators and stuff like that. If that is the case and you're brand new and like, you know, short selling and bear markets and all that's already going a little bit over your head, I have like an 8-hour intro course that I can send to you guys. I sell it on my site, but you guys can just have it. Don't tell anybody. No, I'm just kidding, but it just saved me a lot of time. If you guys, you know, so if you need that, just put your email and your phone number, and I'll have Omar send that off to you guys, and that'll get you a good foundation. And then later on, watch this webinar again, and you'll have a lot of aha moments. Aha moments means like, right, you're connecting the dots because that'll be really, really important. And I already got you on the list. I would never forget you, ma'am. Don't you worry. And then I'll make sure to definitely get you guys that class. It's 8 hours. It's on an LMS system, so I'll need kind of an email and some info to just plug in there. I won't spam you with anything. But, yeah, just put in your name and your phone number. That way Omar can get a hold of you guys and make your passwords and stuff like that. And we'll make sure to get that thing going. For those of you guys that have been with me for a while, you won't need it because you're not beginners. So let me know if you guys need that, and I'll get that too. Then once you watch that, right, come back and watch this one and some of the other stuff that the previous set of webinars on your YouTube, and you're going to have like a really sweet foundation to actually start making moves. Like, I mean, like really making moves, you know, in terms of your education and your process and where you guys are going with this stuff. So just bear with me a little bit. Hey, Mr. Goodwin, how are you? So let's talk a little bit about this day trading, and we'll make sure to get this party going. So there are 3 stages of the trading day. You have the open, the middle, and the close. Okay, so there's 3 stages. A lot of people, what they do is they kind of just do the same stuff all over and over all day. But that's not the case. See, in trading, you have different stages of the day, just like you have different time frames. So like you have day traders and then investors, right? So somebody that's trading 5 or 10 minutes at a time, and then somebody who's trading weeks at a time. Well, those 2 people, they use different patterns, and then they use them on different time frames, right? Because their goals are different. Well, even in the smaller world of day trading, you will have 3 different sets of patterns and strategies that you need to use. You have the open, which is 9:30 to 10:30 in the morning. Write that down. That open, that first hour is the wild one. The second part is the middle of the day. The middle of the day is 10:30 in the morning till 2 p.m. End of day, now, Tahiti time, Harsh, Tahiti time. And the close is 2 p.m. to 4 p.m. It's Afghanistan time. I don't know what Mountain Time is, man. The world revolves around New York City in trading. Now, the setups for each stage are different and need to be managed differently, all right? The setups for each stage are different and need to be managed differently. So like patterns that we trade at the open, which is what I focus on, that's the wild stuff. The open is about big spikes up and down. It's volatility. So like at the open, the stock may open up and spike up really fast or down, depending on the overall structure of the trade. But a lot of people stay away from the open because that volatility, if you're on the wrong side of it, oh man, you can be in some trouble, because now what will happen is you're going to take a lot of losses because there's no structure around it. But I focus on the open as usually waiting, right, 30 minutes to an hour till the market stabilizes. It gives away all the opportunity. See, at the open where you have that volatility, if you can put some structure around it using specific patterns and techniques, then what will happen is you will be able to corral that power and trade for a lot shorter time. You know, for the students that have been with me for a long time, you see, I very rarely venture outside the first couple hours of even the market. I'm great at trading in the middle of the day and end of the day, but I don't need to, you know, for the most part. I usually like to trade for a couple hours, and then, you know, I hit the gym, run my errands, and I come back for the close, which is like 2 to 4. I'll see if anything's popping, and if it is, I'll keep trading. If not, you know, I just kind of hang out with my students in the chat room, and we get it going. It's important to know what type of market we're in, and we're going to talk a little bit about this, because you're going to have to go long only in certain markets, but there's going to be certain markets like right now where you've got to learn how to short stocks. And you're going to have to learn how to short, not just on a short-term basis, a day trading basis, but even for much longer periods of time, which could be for days or even weeks, depending on if we get ourselves in more of a bear market, you know. And I know we're going to be talking a lot about shorts, but that's because the market has been really red. I'm not just strictly a short seller or anything like that, but when the market tells us, hey, we need to add a little bit to what we do, then that's what we're going to do. So knowing how to short stocks is really the key for today's market volatility. It's essentially meaning that you're betting on a stock to go down. So just like when you buy a stock, you're betting on it to go up, shorting means you are betting on it to come down. So it's oftentimes people can feel like it's riskier, but with a proper plan, you can make much more money in a really short period of time. I love shorting stocks. Even in bull markets, I'll still be shorting stocks. And the reason for it, and we're going to talk about a couple specific patterns and really what you need to be doing. But the reason for it is that, you know, when stocks fall, what will often happen is in a matter of a handful of weeks, you can give up, right, what took months to build. And so that's going to be just really important when we think about stock shorting. Is like, why would we want to do it? Well, we have to trade with the trends, but then more important than that, we have to be able to do that. So for those of you guys, I use a charting platform called TC2000. All my students use it. You can see it's this beautiful kind of really bright, really bright trading platform. I'm not a big believer in buying trading tools like news reports and scanners and stuff. But I would say out of all the tools I use, this is probably the one that, you know, I've used for a decade. And I think it's one of the best for like having all in one. You can get your news, your scans, make your watch list, and then of course look at your charts all in one. And it's, you know, fairly cheap. They have a free version of TC2000. So this is called TC2000. They've got a free version of it for those of you guys that have, you know, never traded or don't have a charting platform yet. TC2000 has a free one. It's not as good because it's free. One thing to kind of just remember about trading, guys, it's a little bit different than some of the other industries out there. But in trading, none of the free products are any good. Like, because they're all teasers, right? Just like how I'll be giving you this awesome webinar, you're like, fuck, that's pretty good. But it's like nobody really does it for free, right? Like there's always something in it for somebody. Everybody's got an angle. So this free stock chart, they got an angle too. They have a free version. It's really good. You can use it, but it's not as good as the, the paid one. That's how it always goes. But if you go on freestockcharts.com, we can make your platform look fairly similar to mine so you can follow along while you're learning. And I'll show you guys how to set it up. If you could just give me a raise of hands and let me know if you do not have a charting platform, so I know how much time to spend on this, whether it's just something that's 30 seconds or I need to show you guys how to set this up. If you just give me a, hey, I don't have a charting platform, hey, or I need this or whatever, just let me know so I know how to spend it, because I just got Deb right now, Deb and Dennis. Boom, 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 boom. Okay. TOS, yeah, TOS would work too. And yeah, you guys, your brokers and all of those will have charting platforms too. But if you don't have one and you're just brand new and you've never really seen this, then I'll get this thing set up for you guys, and we'll get this party started. Damn, Mr. Todd, I don't care if you have multiple charting platforms. I'm just making sure if you don't have one, then I show you how to sign it up. But it's good to know, Mr. Richardson. All right, so guys, if you just go on, we'll spend a couple minutes doing it. And in the intro class, I send you, there's also a spot in there that shows everybody how to set everything up. But if you go on freestockcharts.com and you just hit open new layout, what's going to happen is that you're going to have something that shows up like this, right? It looks like a big hot mess. But just do that, open new layout, and then here in the corner, type in AAPL. Remember, this is recorded, so I'll make sure. Just put Apple in there so that we're all at the same spot, looking at the same ticker. So now how do we get this to look like mine, right? So just follow along, and, if you guys need any help, I'll make sure we get it for you guys. So just kind of move this down a little bit because we don't need this to be too big. And then boom, boom, boom. See where it says 10 minutes here? Click it and move that to daily. All right, cool. Now, what we're going to do is just add some indicators, and we're going to add 4 different indicators to the front. So what I want you to do here where it says add indicator, click that button. And then what we want to be doing is come down. See, as you scroll down, you'll see this thing here, moving average. And there's a lot of indicators, guys, but we won't, you only need a couple of them. So I want you to click that. And now let's just say add moving average 2. Put price history. Cool. All right, you guys good so far? Cool. Now we're going to do that 3 more times. So I want you to have this 4 times. It's going to be redundant, but we're going to change around the settings on it. All right, so type in moving average. Do price history. Bam, 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 bam. All right. Now, as you got these 4, we're going to start editing these bad boys. All right. So we're going to start editing these bad boys and get this thing going. So once you're in this thing, now what we want to be doing is editing this. So hit edit over here. And now see like all these different buttons. I want you to change this color. I changed it to a light blue. I always try to keep mine light blue on this one. And then see here where it says period? Click over here and put 9. All right. Now leave this the same. And then see over here where it says average type. I want you to click it and drag it down to exponential. And now we are good to go. All right. Now, it takes I'm not going to explain what every single one of these things does because for the portion of the class, we're just talking about the 2 setups, and they don't have anything to do with necessarily these charts, but this is your base configuration. So edit this again. And I use these specific sequences because they work the best for momentum trading, which is like what I do. So make this like pink and keep this simple. So because I trade momentum and trends, I find this is really kind of the sweet spot for trend trading. Then keep this moving average 50, keep that the same. And then click this last one, edit it, change this to 200. Make that kind of like a nice little orange. And then now you have some charts. Now the last thing we're going to do is add stochastics. So type in STOCASTIC. Click that. I kind of drag this down a little bit. It's taking up a lot of space. All right. Now edit. I know I'm kind of breezing through this a little bit, but just bear with me. Full stochastics is the better one, Mr. Casper. Cool, cool, cool. So now it's going to be 533. Now you've got a base configuration, all right? Now, what the heck does all this stuff do? So moving averages serve 2 purposes. So these things here, these squiggly lines, like what the heck are they, right? Well, moving averages serve 2 different things, okay? One thing that moving averages do is they help us identify trends on a particular time frame. So like your 9-day moving average is your short-term trend, okay? And how you would be looking at that is the actual slope of the moving average will tell you if the trend on the short-term basis is up or down by the slope. Easy enough. So the actual slope of the moving average will tell you the trend on that particular time frame. So your 9 is your shortest moving average. Now your 20-day moving average and your 50-day are your intermediate term moving averages. So what you'll see via the slope of the moving average is whether your trend on an intermediate term time frame is up or down. And then the last one is 200-day moving average, which is your long-term trend. Your long-term trend is basically your trend over the course of the year. It's going to be your slowest moving average and one that's nearly takes the longest to move because it's the average of your last 200 business days, which is about a year. And the reason these are important is that when you're trading, right, we're always trying to trade with the trend. So one of the things that happens is, like, for example, if I was taking a short-term trade for a day or two and my 9-day moving average is curling down and it's on top of the stock versus under, well, then that is going to act as resistance. It's not going to, your stock is not going to move very clear. It's not going to move very concise because you're going against a trend on that time frame, but it's also acting as levels of resistance. And then your intermediate and your long-term is in a similar manner. And now it doesn't mean that, I would never take a short-term trade if my 9-day moving average was down, but I would have to have a set of things I would need to see before that would happen. I would need to see a rubber band setup, some parabolic setup, a 1, 2, 3 pattern or something like that, which is obviously I'm getting a little bit ahead of myself. But in the end, that's just kind of a quick way to do it. The second part that really works and is really important when you think about your moving averages is what else can they do except identify trends? Well, moving averages can actually act as areas where price may bounce off, and they can actually be areas of potential buy spots where you could have inflection points in a particular stock or even a particular cryptocurrency that holds it back or allows it to bounce. Now, so they can act as actual areas of support. where demand may flow in to a stock or a cryptocurrency. Does that mean that we just buy anytime you come near a moving average? No, 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 no. So when you think of indicators, right? So, you know, when you think of all these indicators, no matter what anybody's ever told you, this is 100% fact. Indicators should never be used for buy-sell decisions. You know, trading is not robotic like that, where you see one indicator and you say, oh, I'm going to buy. Or you see another indicator, you say, I'm going to sell. Right? These are just squiggly lines on a chart. Like right? They can't make you put your hard-earned money into it, the money that you need for your kids' college educations and your mortgage. You're not going to take that, and because some indicator gave you a signal, you buy and sell. That'd be a little bit wild, even though a lot of people sell it like that. But what indicators can help us do is they can help us assign validity to price action, to price patterns that we're seeing. So like we're going to learn two patterns today, right? And what our indicators can help us do is provide some structure around that trade and then just assign some meaning and probability to it. So like how I want you to think about like indicators and just patterns in general. In trading, every trade is just a coin flip, right? You win, you lose, all right? A stock might go up, maybe it goes down, but it's a zero-sum game, right? Up, down, win, lose. So how do you take that coin flip? How do you take that coin flip and turn something from a 50-50 shot, which is just luck, right? We might as well go to the casino, to something that is high probability that we can duplicate over and over and over the course of years or decades to make money. When you think about trading, think of it as like you're like a lawyer, right? You're a lawyer, right? For a lawyer to win, what do they have to do? They have to prove beyond reasonable doubt that a person is guilty or innocent, whatever it might be. Well, in trading, it's the same way. We're lawyers. And for this trade to be worth our time, our effort, our money, we have to show pieces of evidence in our favor that take it from a 50-50 coin flip to something that's high probability. So it all starts with a price pattern. So we're going to learn two patterns today. It all starts with a price pattern. Then we overlay our volume. That's your second most important indicator on a chart. Then we overlay our moving averages. Then we overlay our stochastics. And so what we start doing is we're building a case that says, okay, this trade is worth our time, our money, and our psychological capital to make the trade. I have something that's a high probability, right? A 50-50 shot. Now I have a nice price pattern. Maybe I go from 50-50 to 60-40. Right? Maybe my moving averages are supporting my trade or my stochastics. Maybe I have a great volume pattern. Well, now what's going to happen is every piece of evidence that's in my favor, maybe I move that from 50-50 to 60-40, 65-35 to 70-30 to 75-25. Right? Every single thing I line up in my favor, I'm adding probability to it. Now, no trade is ever 100%. But what happens? What if you can get into the 60s or 70? And then you do it 1,000 times. You make 1,000 trades with that same type of attack on your analysis. Well, now what's happening is you're building a case and probability over and over and over and over. And yeah, you may take one trade and it could be a dud, but it doesn't mean anything because it's just part of the mathematics. You may even take a second trade. It could be a dud. And you're like, damn, thought I did everything right. So it happens to me all the time. But what happens if I did my analysis correctly? And I took a trade and it was a loss. And I took a second trade and it was a loss. You know what I think in my head? If I did everything correctly? What I'm thinking is, shit, cool. my next 4 trades are probably going to be winners because I typically bat 60% plus over the course of, right, tens of thousands of trades on certain patterns. And so I know if I take a couple losses, don't get down on it, let the mathematics play out, and over time, my next so many will be winners. Now, let's talk a little bit about opening range breakdowns. So an opening range breakdown is a day trading setup. So I'm going to talk 1 day trading setup, then I'll talk about one longer term setup, okay? So an opening range breakdown is a highly effective day trading setup that gets you into strong momentum stocks early in the move. It's like when you're trading and the market opens, there's no price action yet, right? The market is just open. So you don't really have, as a day trader, any structure, anything to judge your trade on yet, unless you're just trading based on intuition, right? Which is never you should do. When the market opens, never take a gut trade, never take anything without building a case. Overlay the things that we talk about, and if you do that, it's going to keep you out of a lot of stupid trades, which is frankly more important when you're new than just being right a couple times. So what we're looking for is opening moves with a little bit of structure. So what we're doing is we're looking for stocks that gap down at the open. Okay. So guys, markets gap and stocks gap. What I mean by gap is a gap in a stock is essentially when some news is out on the potential stock that's earnings related. So like you can see like today, Netflix at 4 p.m. had earnings out. So this thing's already up like $30. So what's going to happen tomorrow on the chart? You're going to see like a $30 gap on this thing. And that indicates that there's some type of earnings out. And so we trade these type of earnings plays for very, very specific reason. So I hunt for these gaps because those gaps usually mean that there's earnings out, good and bad. So I look for good earnings and bad. Why would I want to be looking for stocks after they have their earnings or some type of press release? It could be a biotech stock announcing a drug, a defense contractor getting a contract, right? It could be any type of good news or bad, right? Somebody gets sued, so on and so forth. But I'm hunting for those news plays. The reason is this. Technical analysis, which is what we use. Technical analysis is the study of charts. And why we study charts versus fundamental analysis. Fundamental analysis, right, which is like studying the company's management and all that kind of stuff, right? What are their earnings? It's subjective, right? You have to place a valuation on it, and it's hard to do. Very few people really get it right. Technical analysis is based on charts. So this chart shows all the buying and selling of Apple since May of 2017. So this is past data, but this is stuff that has happened. It's concrete. And what I can gather from this chart based on all the buying and selling that's gone on is certain types of patterns that will repeat themselves over and over. And every stock has those. So why I like to do that is that throughout history, human behavior has never changed, right? Since the days of the first people have always been governed by fear, greed, wanting to take care of their children, right? Do nice things for their family, so on and so forth. Spend their money on boats and cocaine, whatever, right? People have always been motivated by the same stuff. And so what happens is because the motivations of market participants never change and the motivations of people don't change, what we can do based on a chart is say, I can, with reasonable probability and assigned probability, figure out what's going to happen next when I see A, B, and C. I know I have to do G, H, and I, or whatever would be next, right? We can figure out what to do next. It won't work every time, but if we have a 65, 70% probability, and we can repeat ourselves, Now we're really working. So this is a really good pattern in the beginning, but I like to trade gaps because this technical analysis is the study of price patterns, which is good. But what happens is when we play gaps, stocks that have had some type of news out, what we're taking that is a fundamental event, right? When a company has news out, like its earnings, that's something that's fundamental. We made this much money. We have this type of news. So now what we do is we apply our technical analysis, our study of charts, to something fundamental. And so now that's a perfect storm of awesomeness, right? Because we're taking a fundamental piece and then applying what we know about patterns and technical analysis and probabilities and risk management. And now we're marrying them together and we can get really powerful moves. And that's going to be, that's the whole ballgame, and I'm in the business of trading momentum. I want to find stocks like Ricketa that can go from, $5 to $70 in a handful of days based on, that doesn't happen because of, just pure charts. There has to be some news piece into it, right? I want to find the stocks like the elephant that are at $3, $4 and can run to $140 in a few days. And this happens in cryptocurrencies also, right? Those big moves. I'm looking for those big exaggerated moves to get these things going. And so I need to have a fundamental catalyst and marry my technicals to it. And I get a smoother and more explosive play. And the way you really got to think about it is more of like, if Celine Dion had a baby with Donald Trump, you would have like this super baby, of all sorts of weirdness going on. And that's where we need to go with our trading. So technical analysis and fundamental analysis. And now we're getting it going, the marriage of two. Now, for those of you guys that are using free stock charts, it is a little gross, but kind of hot too. Now, for those of you guys, so this is our daily chart. To do intraday trading, what you want to do is add a tab. Change this to 5-minute. When I'm day trading, I use 5-minute charts, meaning like each candle is going to be 5 minutes, and this will be really important. You don't want to go any you don't want to zoom in too much sometimes, but 5 minutes is a good spot. And then I want you to add 2 indicators. Type in moving twice. So now where it says moving average here, edit it and put this as a 9 also. So I want you to do just EMAs on this one. So make this one light blue too. See where it says average type simple, make that exponential. Bam. And then edit this again. Boom, 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 boom. Good. Now we're going to add one more. VWAP, volume weighted average price. Add indicator 2. I know I'm kind of cruising through this, but just bear with me. All right, now we're on a roll. Now we got something, all right? This is good. You guys feeling this so far? All right, cool. So this is your intraday chart. This is your daily chart, all right? And guys, you can save those layouts and all that fun stuff. So let's talk about these gaps. So how do you find these earnings plays, right? That's all right. So you got these earnings plays. Where do you find them? So the big thing in trading always. So you have patterns which allow you to assign probability and figure out how to get in and out of a particular trade. Then you have, but before you get to that point, right, you have to find the actual gaps, right? So you have to find the stocks that you want to trade. So how we find stocks that we want to trade is via scans, meaning that we can use our software to run scans to look for certain characteristics. Now, for those of you guys that don't have any paid software yet, you can use this website, thestockmarketwatch.com. And if you go here on this pre-market tab, and scroll down, what you'll start to see this top gaining stocks, top losing stocks? So like these stocks here, these are stocks that are having PRs out or new earnings out of some type out in the market. So they're already out. And so what I do is I hunt through. This is just 10% of our strategy, but we hunt through these things in the morning to see what could potentially be a gap or earnings play that we would do. So I go through these, and I run a software to do these. So I have some filters on this, but for the most part, you could go and use these and you'll be good to go. And so what I'm doing is I'll put in each one of these into my TC2000, and I start looking initially for what's going to be a clean gapper. Meaning clean gapper, I'm looking for stocks, and right now we're just talking the short side. I'm looking for stocks that are breaking lows, that are in downtrends, that are breaking below support. I don't want to have stocks that are gapping down into some type of support, because then it'll just go back the other way. So that's the first thing. I'm looking for those clean kind of gappers. I'm looking for something that is breaking down like multiple levels of support, ideally, because those are the ones that are going to have follow through into the rest of the day. So that'll be really, really important when you're looking at these things. And I want clean ones that have follow through. I have my VWAP setting on there is no VWAP setting on TC2000, so just be 0 on like TC2000, I believe, or Thinkorswim. It's just 0 setting. So I'm looking for those clean gap downs. Now what I'm going to do once I'm in it is look for a very, very simple pattern that allows me to get in quickly at the open based on a small consolidation. So what I'm looking for is some type of spike down at the open based on that gap. And then from there, what we want to see is something that's just really, really simple. So I'm looking for 3 consolidation bars on a 5-minute candle to the sideways. And they got to be in a tight consolidation. So I don't want it to gap down and it be like this. I want to see it gap down. I want to see minimum 3 sideways bars of 5-minute candles at the open. So this is going to be best within the first 30 minutes. Remember, the open is just 9:30 to 10:30, right? So it's just that quick open. So I want to see this at the open. You cannot do this setup in the middle of the day or the end of the day. It won't work. Those times of days, you need longer patterns. Remember that for those of you guys that are trading with us for a while. Middle of the day, you need longer patterns. Middle of the day, you need longer patterns. That's always been the case when we think about trading. It's just middle of the day, longer patterns. So what I'm looking for now is a spike down, minimum 3 sideways candles. They got to be in that tight range. And then once they break below, what I want to do is put a stop loss, which is just right in order on your computer, saying that I won't, if it goes above, I want to take my loss. And it always can work only with a clean daily chart. So don't take any type of gap down trade without a clean daily chart, like if it's moving down into a moving average or something like that. We want to see really, really just kind of clean ones. So now what we're going to be doing when we see these bad boys, oh man, this is one of my favorite types of trades. So what we want to see when we see this type of thing is just a really simple, clean consolidation. Ooh, wrong one. If I could turn back time. All right, so check this out. So see this, like Qualcomm, this is like your kind of quintessential type of trade. So when you see this, right? You get a gap down, 1 candle, 2 candle, 3 candle, 4 candles, right? So see that nice tight range? So it's going to be a short, right? Set your stop above that nearest range, and now you're playing this thing down to the downside. Now, the important part when you're trading is to think about a couple things. An important part of trading is to think about a couple things. If I risk 50 cents, once I get 2 times or 3 times my reward to risk, I want to start looking at potentially taking profits. And then the big thing is to follow your trend. Remember, you have your moving averages. So like your 9-day moving average is your short-term moving average. You have your 20, which is your more intermediate. So write it down those as they're coming down, because those can help you keep into the trade a little bit longer than you normally would. Now this is FSLR. So check this out. Same type of deal. So you get this gap down. 1 candle, 2 candles, 3 candles of sideways movement. See how you got a nice range there? So what we want to see is that really, really clean, tight range. Once it gets out of there, once it breaks below on the 3rd candle at least, all right, could be the 4th or 5th, you want to take the thing short and then just put a stop loss right above that nearest base. So you're going to risk like 30, 40 cents on something like this. And that's going to be really, really important. You want to have that nice, clean, tight risk. And guys, I do this also, of course, to the upside too. Today we're talking a little bit more about shorting than necessarily longing, but you can do them also to the long side. I do this pattern every single day. Now, same type of deal. So you get a gap down. And then 1 candle, 2 candle, 3 candle. See on the 4th candle, you break this low. You want to put a stop right above that last base. All right, so you're going to risk on something like this. Like, for example, if it's me trading, I'd go and probably short 1,000 shares of this. So nothing too crazy. 1,000 shares, you might have to use margin or whatever, because your risk is going to be, say, 30 cents. So if your risk is going to be 30 cents, if you short 1,000 shares, what's your total dollar risk? $300. But if you have the potential to make dollars, then you could make potentially, right, $1,000 or $2,000 or more, but you're only risking $300 or $400. So it's a great reward to risk. And the reason we can trust in doing that is that this is not just a technical analysis pattern. Remember that this stock had a gap, right? So this thing had some news out. Something nasty came out about it. Now what? Who knows, right? Who cares? If I'm only going to hold this thing for, say, an hour or two, then I don't care about the news, right? I want to trade the price action. Now, of course, holding on to your winners is a 10-hour subject in itself. But what I like to do when I talk about selling is I use a reasons to sell list. So something dynamic. So I've got 10 different reasons that I may get in and out of a stock. From higher highs, higher lows getting broken, or lower lows, lower highs. Maybe you're breaking above your moving average. Maybe you're doing right. So your moving averages start to curl up. Maybe market structure changes. There can be a host of different reasons that you may get out of a stock. But the easiest one, when you get a trender, is really follow that 9 EMA also, because that'll tell you your short-term trend. So that's kind of one thing you can use as a guide. But this can be very, very powerful because, you can short, your risk is going to be really small, but then you have the ability to potentially make dollars. Now, the thing is this, it doesn't matter what size account you have on something like that. Don't let that scare you. If you have $5,000, good. Short 200 shares of this. Why? Well, if your risk is 30, 40 cents, you got 200 shares, you're only risking $80, maybe max $100. But you have the potential to make $500 or $1,000, even though it's a little bit higher price stock. One thing they're always kind of mindful is that new traders, they always want to trade penny stocks. The problem with penny stocks is it's impossible to assign probability to them. Small cap stocks are turds for a reason. But the other thing is that you don't have predictability with a small cap stock sometimes. I love trading small cap stocks when they're hot, okay? And I get a hot one. But I don't say, if I had $2,000 bucks, I wouldn't say I'm only going to trade $1 stock. I wouldn't care. If I had 100 shares of a $20 stock and it can move $2, $3, $4, then I'm going to take that because I can still have range. See, it's easier to trade back and forth when you have range. But when you have like a $1 stock and it moves up or down 10%, it's only 10 cents. You don't have that range, that up and down, that you can trade it back and forth so that you can have entries and re-entries and right, all that kind of fun stuff that you need. You just don't have that. And so we want to be in the business of not just saying like, okay, I'm going to have only a $1 stock or $2 stock or anything like that. You know, we've got to be in the business of saying, man, like I want to be, right? I want to be in the business of just trading range. And if I can get range, then now I'm going to have something that's like a lot more powerful. And when you get a good PR stock that does that and you have the range, you know, the sky's the limit. Like if you're thinking about like, hold on here, let me, you know, when you're thinking about like, it doesn't matter the price of the stock necessarily. So let me show you something. Go back here. What's this? Ooh, hold on here. Whoa. So like this was like a PR stock. We were trading back and forth, you know, a couple weeks ago. And same type of deal. See, it's not necessarily a small cap stock, right? It's not a dollar stock, but you still have that ability because there's a PR out. And then if you use the patterns that we use, you still have the ability to take, right, big chunks on your trades to get some real action going. So, you know, don't necessarily worry about the price of the stock. Worry about the range that you can trade back and forth. Thing is this, like if you had a $50 stock, even though it's really high price, but it's going to move up and down $5 that day, and you've got 100 shares of it, right? How it's easier to take $2 here, $1 here, $1 here, than on a $1 stock where you only have that 10 cents, it's moving around. There's nowhere for it to ping pong around back and forth for you to kind of sashay in and out. And that's what day traders do, right? And so as day traders, we're way more concerned with range than price because we want stuff that's just tradable. And so, you know, you'll see like a lot of my, you know, a lot of my slides will be like in a particular price range because not a particular price range, but they'll come in at any type of price range. It doesn't matter if it's small cap or large cap. For me, I'm just looking for movement. So short, set my stop. And then for me, once I'm at like 2-to-1, 3-to-1 reward to risk, I like to take some profit, but I don't necessarily take the profit. I start looking at it as a spot where I could take profit, okay? I start looking at it as a spot potentially I may want to take profit, but I'll use my 9 EMA as really a guide to see as long as it's really sped up and it's cruising down, I don't have necessarily any need to take profit. And then as the open is over, you know, I might start looking middle of the day for different patterns. The one thing about the open, guys, if something's called opening range breakdown, how long are you probably going to hold this trade? Probably for the open, right? The whole point of the open is to trade the open. You know, most likely you're not going to be holding this thing till the end of the day. It's not a all day long setup, right? This is meant strictly for the open. And that's good because you guys, if you want to be traders, I mean, frankly, sit in front of the computer all day, not really that fun, right? The whole point of becoming a trader is so you can actually get out of the house once in a while and have a little fun. Oh, yeah. Where does this thing go? That's true, Harshman. I've traded from at least over 30 countries, over the last so many years. All over the place, too. I mean, fun spots. The cool part about really this type of trading, you don't really even need that good of internet. So check this out. So you got this gap down on AYI, right? So now see this? So this is a $100 stop. Now look, one candle. This is the second candle. The third candle you break, and now it's short. Set your stop, right? And you're just taking those kind of quick trades. See, sometimes you get like that big, massive home run, and other times you may not. You may only get a $3, $4, $5 type of drop, but that's okay. We're in the business of not always. We put ourselves in the position for the big home run trade, but you don't necessarily get it. Sometimes we only may get that $3 or $4, and sometimes we may get more. This is another one we did in Facebook. So Facebook had gap down because, right, they had that Russia news out. It was like, who even knows, right? There's Russian news is for everything, it seems like these days. Everything is a Russian news. So Facebook had some Russian news out, and this thing comes in and gaps down. Now look what starts to happen. So you start to consolidate. One candle, two candles. Let's see your third candle, fourth candle. Fourth candle, you break that range, that trend line, right? So you're going to break that consolidation. See how that range gets tighter and tighter and tighter and tighter? So you break that range, you're going to short it here. So that's about 175.50. Your stop loss goes here. So you're going to risk about 50 cents. And now you have the potential to make $4 or $5 or $3, whatever it might be. You've got yourself a nice, easy, go lucky move. And we do this in cryptocurrency the same way. It's that same type of pattern you can do. So like, for example, we were trading in the chat room. We trade Ethereum and Bitcoin and stuff like that. So if you were doing the same type of thing, you do the same type of thing. So like Bitcoin had a flush down yesterday. There's no gaps in cryptos because it's open, right, 24 hours a day. But you got like this big spike down in Bitcoin. So like that spike down is, that's like your opening spike, right? Like your gap. And then what starts to happen, right, is same type of deal, right? You get that consolidation right at the open, right? Minimum 3 candles. And then when you break below, right, you get that nice flush. You want to be taking those trades right into it. And I do my shorting at Kraken. I find that's the best spot to short in cryptos. But same type of deal. So spike down, minimum 3 candles, and you can take those for those quick counter trend trades. And that's going to be really important. Like you've got to learn how to trade both ways. So as in something like a Facebook, right? As we start covering our risk times a few, we want to always take off a partial position. So I usually take off a third. And then, you can see I kind of get a little bit of a spike back into the 9 EMA. That's actually a short spot too. Like you can re-add some shorts into that 9 EMA if you wanted to. Then you get a nice spike down. And see, this is just a bear flag. Your bear flag is your quintessential sideways consolidation. So a bear flag is where you get a spike down, and then you get sideways consolidation, and you have to have your 9 EMA creeping right up on top of it when you do a bear flag. That's your sign that your risk is really tight and you have a really tight pattern. Hold on here 1 second. So we want to always, in any type of pattern, have on a flag pattern, this is bull flag or bear flag, so the upside and downside, we want to have that 9 EMA curling right up on top of it. Guys, stocks, they get their power from consolidations and bases. And so what happens is when you go sideways after a thrust down, you're building up energy to make a secondary move, right? You're building up energy to get a secondary move. So when you get that 9 EMA curling right up on top of it, it limits your risk, but also provides power. So then what happens is as you break below, you just put a stop loss at your 9 EMA. Guys, a stop loss just means, right, if it goes above, you're going to get out. So how much are you going to risk on a trade like this, right? 30, 40, 50 cents to potentially, once again, make dollars, you know, and it doesn't necessarily matter account size or anything like that. If you're trading 30, 50 shares, so what? You make $5, good, you had a nice day. The whole point when you have a smaller account and you're growing it, I'm the master at growing $2,000 accounts, but the whole point of a small account and growing it is not to get a home run in one trade. You're going to grow it $100, $200 at a time, day by day. And what happens over the course of a month is you have grown your account a little bit more. You can take a little bit more risk, and then you grow your account a little bit more. If you take the long view, how will I survive over the next 6 months to a year? And you build chunk by chunk, your odds of success are infinitely, exponentially higher than if you're going for the home run trade, hoping to grow your account, because those only work 1 out of 10 times or 1 out of 20 times. So that if it doesn't work, what happens to your account? You bleed out. I want to have safe and steady trades and grow 100, 200 at a time, because over time I'll be able to take more risk. Now, I know for a lot of you guys, you know, a question I get a lot is, well, what about pattern day trade rule? Pattern day trade rule is a U.S. rule. So if you're Canadian, you don't have pattern day trade rule. If you're in the U.S., there are all sorts of places you can still trade. I have in my hedge fund over 100 traders that I assign capital to out of my end, so that they have over 25,000 in buying power, so they can day trade freely with even a couple $1,000s in their account, and they'll have up to $25,000 to $30,000 in buying power, and so that way they can kind of trade freely and not worry about those things. And what I do is, you know, for my students, I'm always monitoring them. The ones that are good, I give them more and more capital to trade with. Right here, have some more buying power, have a little bit more of this or whatever you need, because I know if they're not going to lose any money, then they're only making money, right? They can keep trading and start really building their account. It's a great way to kind of get more size and more capital into things. And there's a lot of structures like that out there. Very simple. So this is your ORB. That is your bear flag, all right? Your intraday bear flag. Woo, yeah. Casey, I just told you. SUPN, same type of deal. So you got this nice base breakdown, right? So you got this base, you're breaking below. So now you get a spike down at the open. 1 candle, 2 candle, 3 candles, sideways movement. Once you break lower, your stop goes right above there. So you're going to risk on this trade 25 cents for the potential to make dollars. That is a huge part, right, of what we have to do. How can I risk small amounts of money and make multiples of it? So if I had a small account and I traded 200 shares, what would be my risk? $50. What is my potential reward? Right? Maybe a couple $100 or more. That's a good RR. That's how you build piece by piece. And this type of move, right? This is just a few dollars. This happens 10 times a day. It doesn't, you know, that's not some pie in the sky type of setup where it goes up 1,000% and you're like, holy shit, this is something, right? It drops a few bucks. This is something that happens over and over all day. See, one of the things I want you guys to get used to is beyond just thinking about, right, the price of stocks, is more thinking about range. But also, if you use this type of pattern and you're doing it on this type of stock, then you have opportunities every day, dozens of them. You know, what happens in the stock market is any day there might only be 1 or 2 of those $1 stocks going. right, that are really exploding. And yeah, I know how to catch them too. I mean, I trade them if I see them, but there's not that many of them that go. But every single day, you will have some $20 stock that drops to 19 or some $25 stock that runs to 30 or 28, right? Because it's not obscene percentage-wise. But you taking those $2, $3, $4, and you doing it over and over, that's how you build your account. But the beauty is that there's just dozens of those opportunities every day. So it's not something where, right, it's a needle in the haystack you're always hunting for. Heck no, right? We're looking for something that can move a couple bucks. That's not a needle in the haystack. That's just, we've got to take our technology and point it in the right way, and then we'll have numerous opportunities to shred, right? So 1, 2, 3, short. That's a simplistic setup, but it's something I use a lot. Now, the one caveat with this setup, and you can do it to the upside too, by the way, it's still a hard setup to learn for some people. The speed of this setup, because it's at the open and things drop fast, things move fast at the open, the speed sometimes takes a little bit of time to get used to. This setup, even though now it's like the easiest for me because it's so easy to spot, when I was new, this one was the one that cost me the most hair follicles. Nope, I'm not kidding. And the reason was that it moved so fast and I didn't have any discipline. I was unable to discipline myself. And so what would often happen is if I wasn't prepared or I didn't get in front of my computer at the right time and I was like really ready and looking, and I'm just scrambling and multitasking. And at the time I learned this setup, I had a job. So I'm sitting in front of the cubicle, dodging my boss, doing my boss Binkles. He was scary, man, because he had a super heavy step. He's like a big Jewish guy. Really, he's like 250 pounds. Heavy step. So I could hear him rumbling in the office like from anywhere. And so, like, I'm trading. I'm not supposed to be trading. I'm supposed to be making a phone call. And if I start hearing that rumble, it's like Jurassic Park, man. When that Tyrannosaurus Rex starts creeping up on that Jeep, it was like no different. I'd be sitting there on my TC2000. I'd hear the and man, I knew he was creeping. And so then I was always like, right here, it's dodge the boss day, right? You turn your monitor or like, next thing you know, you put something else up but then like no matter what you're looking at, it always looks shady. My boss like, man, you really spend a lot of time on that ESPN.com, huh? I'm like, damn. I brought up the wrong website. I mean, the worst. But at least it was ESPN.com, not something dirty. But man, you're always dodging. So at one point, I put mirrors in the office. At the time, I had hair, so I was super vain. Anyway, so like I had mirror in, so I'd always pretend like I was doing this. But those mirrors were cocked, so that when the Binkles, like I first would hear the heavy step, and then I'd be like, okay, he's 30 yards away, 20 yards away. And then like I start changing those mirrors around, and then it was just a constant, right? You're constantly just dodging. And man, I mean, he was really, really going for it, man. He could hunt me down from anywhere and be like, what are you doing? I'm like, oh, nothing. Because he knew I liked to trade. I mean, I was always talking about trading, right? I'm trying to convince all the guys I work with to trade. So he always knew I was trading, but that's where the opening range breakdown was a little bit hard for me because they move fast. And here I'm dodging grenades back there, and here I'm dodging grenades and I'm trying to get this setup done. And so that was causing me a little bit of losses because this thing moves fast. You got to have some focus and do that. And you don't have to, like these type of stocks, Phil, you don't have to reserve shares for them. I never reserve shares for anything. These aren't specialty stocks. Like your penny stocks, you may have to reserve them, but really like any normal stock, you don't have to reserve them. Not even that like E-Trade. No aggression for me, man, Jonathan. I'm simple trader, man. I'm just trying to make money and cruise out, especially it's summertime. This is my ideal day. I teach my morning class, so I get in front of my guys. I get in front of my guys in the morning at 7:45, and we do a morning class. We get ready for the market. We go through the gappers. We talk about our watch list. A morning class, very important. Then, my ideal day is, right, I would trade the first hour. I'm on the beach over here in Destin, man. I'd head out to my boat, cruise around, attempt to foolishly pretend to talk to chicks, and then I'd go back home to the beach, go back home, cruise around, catch a little happy hour. I live next to this beach bar, Pompano Hose, and they got dollar beers from 3 to 6. Play a little Jimmy Buffett. You can play volleyball out there, cruise around. Then I come home and I start my night. I do 2 shifts, my morning shift and then my night shift. So then I'd start my night. I like to start my second shift at 6 p.m. I usually go to like midnight or whatever, teaching class and all that kind of fun stuff. But nothing too crazy. Let's talk about setup number 2. Oh, yeah, Jacob, pumping a hose. Bear flags. So momentum stocks, both to the upside and downside, have long periods of consolidation, right? Long periods of consolidation at lower parts of the range. So what we're looking for is some type of weak downward movement in a particular name, and then that sideways consolidation on a longer term time frame. Ideally with your moving averages kind of curling up right up on top of it. And you want to have like both your daily charts and intraday charts really, really aligned when you're having this type of setup. So what we're looking for is something that's really simple. And you can do this trade over the course of really multiple days. So what I'm talking about is like what we're looking for here is a really, really clean kind of, I do this type of setup all the time. So this is like a multi-day hold. All right. This is a multi-day hold. So what we're looking for is a really, really bearish stock. So see something like this. See how it drops from $30 to $20? And on your TC2000, I'm always scanning for momentum both ways, up and down. And I'll make sure, I know a lot of the boot camp students or new ones are in the class. So I'll make sure to get you all the scans. The one good thing about TC2000, I just have to input your name in, and all these layouts that I have in all the scans, they'll just pop up on yours and populate. So you just have to open them, and like literally your computer will look just like mine. And that's a big portion of, that's important. If you can get your software to look like mine, your learning curve is cut in half, because now you're looking at the same thing as me, rather than spending a month playing around with software, using different software, trying to compatibilize it, right? And like, it's so intimidating, right? You just open yours, open the file, everything populates, and now I show you, right, how to run the scans and do whatever. It only takes, right, an hour, and now you're ready for, you've got this for the rest of your life, and you can start tweaking it, Yeah, so I've got all these layouts. So like, and all my students, we give them all the layouts and all that fun stuff. And so they can come in and have layout groups and different stuff. And so, and I have all my scans set up that I built to find like different kind of plays and, all that kind of hoopla. But let's talk a little bit about that. So how this would work, I would run a scan for reverse momentum. So I'd be looking for stocks that are really, really weak, okay? I'd be running a scan for stock that's really, really weak. So something that's fallen down a lot. Then the next thing we do is maybe there's 10, 15 names that come up. Out of those, maybe a couple of them look the way we want to. And then you got to monitor them for a few days. So you have something that comes down from 30 all the way down to 20 bucks, right? So it's fallen quite a bit. So it's got reverse momentum. Now, bear flag is when you get this sideways movement. See this? You get that sideways movement. It's essentially a flagpole. And then your 9 EMA is going to come right up on top of it, right up on the kitchen. We call that the curls for the girls. If your 9 EMA is not right up on top of it, the pattern will be too loose, and there's a high probability of failing. Remember, we are lawyers. We're on the attack. We build a case when we make a trade. So I want to see a big thrust down on heavy volume. Then I want to see 3 to 10 days of sideways consolidation on lighter volume. Write this down. Start right. I could see right now who's right. I'm just kidding. On lighter volume, I want to see that sideways consolidation. Then I want to see that 9 EMA curling right up on top of it, right up on the kitchen. All right? Once this thing breaks down, you're going to short this thing, meaning you're going to hit literally a short button on your trading platform. It says short. I want to short 500 shares or 200 shares. Short means bet down. Then you're going to put a stop loss at your 9 EMA. Oh, man. Now you're in this thing. You're ready to go. So look, something like this, your risk is, say, what, 30 cents on this thing? Now, so if your risk is 30 cents on this thing and you have the ability to make, right, this thing goes from 19 to 15 in 2 days. So if you have the ability to make $4 and risk, say, 50 cents, that's pretty good. You short 1,000 shares of this bad boy, and this thing rips down in a couple days. You're making it. You're making it. You have 200, 300 shares on a smaller account. Still, this thing rips down $3, $4 in a couple days. You've already gotten this thing going. And I have opening range breakouts to the upside. I've got a ton of videos on it on my YouTube. I think I did last time like a 2-hour webinar on it. It's not a 2-word question. Boom, 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 boom. Right? And this is daily charts, guys. Daily charts. This is a longer term trade. Right? This is over the course of days. And you can do this type of trade intraday also. Oh, yeah. Now, intraday, it's the same type of deal. Intraday, we're going to do the same type of deal. So, right, like this is Tesla. So Tesla's getting smoked out a couple days ago. Just nasty, all right? So look what happens here. So this thing starts to spike down at the open, right? So it's weak. It's already dropped $10. Then see this sideways consolidation? And you want to usually have kind of 3 tests or more of sideways consolidation. The key is going to be your 9 EMA. You want to have minimum 3 to 10 candles going sideways, multiple tests on support, and then you want to see that 9 EMA. Remember, we always use light blue for a 9 EMA. So that no matter what, in a scrub, you know where your 9 is, right? If you get in a scrub, your 9 EMA is old blue. Your 9 EMA is old blue. Always keep old blue as the 9. That way you know. So like test. Now you see how your 9 EMA is coming right up on the kitchen on this thing. So that means your risk is tight, right? You're going to short it here. Your stop loss is going to be here. Your risk is really small. See, the difference between a professional and a non-professional is that the professional is not just hunting for entries. He's hunting for entries where his risk is really small. Somebody that's new or just somebody that's good, they're always just thinking entry. I got to get in. But it's not about I got to get in. It's can I get in while risking almost nothing? So that if it doesn't work, who cares? That's how you always want to think about it. If it doesn't work, who cares? But the only way you can have the who cares attitude is if you trade your patterns right and you let that 9 EMA curve right up on top of its head, well, now you've got nowhere to go. Now it's short, set your stop, let her up. Oh, man. That's hot. It's sexy. It's caliente. That's spicy for people that don't know Spanish. Oh, shit. Now, check out the Twitter. So Twitter has big breakdown here on the daily. So this is just a simple pattern. Right? Flush down at the open. Start to consolidate. 1 test. 2 tests. See, 1 test, 2 tests. 3rd test. You got to have that 3rd test. That 3rd test makes things a lot easier. And that 9 EMA is coming right up on the kitchen. I don't even know what that means. That's something new. I might take that out of the vocabulary. Stop goes there. Short goes there. Very small risk. Beyond the small risk, though, you know what I like about the pattern? You know what's good about this type of pattern? You'll know within one candle if it works or not. See, the worst thing to do, the best part about letting the curls for the girls come right up on top of a stock is that you're at an inflection point. You're going to know in one candle if the trade's working or not. And that's good, right? Who wants to sit around all day in nervousness and be like, is this working? Not working, right? That's not going to work. We don't like that, right? We want to see these things work right away. I don't know about you guys, so this happens to me all the time. When I sit in a stock too long, I get a little nervous, right? You get a little nervous because you're just waiting and you're like kind of staring at it. And the more you stare at something, think about it, right? The more you're apt to just make a boredom decision or a rash decision or just a dumb decision because you're just sitting there like this, like waiting and watching. And I've noticed with traders, tens of thousands of traders I've met over the years. I'm not even joking. The boredom part will get you because idle hands, what did they say? Restless hands, right? Restless hands, restless minds do bad things. So you got to just, the best part about the trade is that you want it to work right away. So same type of deal. So see this thing? So this is AKRX. So the first day, this thing did, a nice trend down. And then right the next day, you could still keep shorting this thing. So this next day, this thing spiked down. And then, right, make yourself a nice bear flag. You got your 9 EMA right up on top of it. Same type of deal. See this consolidation right here? That's a bear flag too. These sideways consolidations are areas that we can look to potentially take a position. And the trade should work fairly quickly. So there's not going to be something where you're just sitting around all darn day. We don't want to be doing that. This is IRBT. So check this out. So this thing got shredded at the open, right? Then you got like a quick little ORB, and you spike down, and then what do you have here? So you got this nice spike down, 3 to 10 candles, right? Just a longer, and this will usually happen after 10:30. Get that nice sideways consolidation. Your 9 EMA right there. Short, set your stop, let her up. Guys, and day trading is all about just taking those chunks. I get $2, $3, $4 chunks, $2, $3, $4, $5 chunks. Oh, and you keep doing them over and over the course of a day, guess what happens? You have yourself a nice day, right? You have yourself a nice day. You take a couple hundred shares, few hundred shares, and you rip $3, and you rip $3, you rip $2, you rip $1. And so remember, we have open, middle of the day, end of the day. So I have setups for each one. A stock that's really hot, that's moving around, there's a good shot if I'm at the computer, I'll be able to take a trade on it at the open, the middle of the day, and the end of the day as it's moving around, as we'll have different patterns for each. Rather than hunting around for new stuff all day, if you've got something that's a heater, it's moving around nicely, it's got good volume, then what's going to happen, guys, is you're going to be able to keep trading that thing over and over. Let's talk about position sizing. Position sizing is knowing how many shares you've got to put into a particular trade. So let's say you're looking to short a stock at 20 bucks and your stop loss is at $20.30. Your risk is 30 cents per share. I like to risk about 1% of my account per trade. 1% of my account per trade. So give or take, and I may change that. What that means is not if I get stopped out, I lose 1%. I mean, if my stop loss is at 1%. It means if my stop loss is hit, I lose 1% of my account. So if my stop loss is 5% away or 10% away, it doesn't matter. Wherever my stop loss is, if I lose it, if it hits, I lose 1% of my account. The reason I like that is that if I have, say, 4 trades going at once, and I'm risking 1% of my account on each one, I know that if I lose on all of them, I'll lose 4% of my account, give or take. It's never perfect. But that gives you a peace of mind. I do this in my retirement account too. So like in my IRA, I have 5 stocks that I'm holding right now that I just recently added in the last kind of big market dip. So in my IRA, I got 5 stocks. I'm risking 1% on each one of the stocks, 1% of account size. So like I know, like I could be out and about and I have stop losses, automatic sell orders in mine, but I know, look, if the Trumpster says something stupid and the market tanks, or the North Korean guy does something, or whatever happens, and I get stopped out of all my trades, I'm going to lose 5% of my account. I can live with that. That's something I can come back from, right? That's not the end of the world, 5%. And that keeps me, right, mathematically always ahead because I know exactly how much risk I have on the table when I'm trading. And I got to know how much risk I have on the table because if I don't, then I'm not dealing from a position of strength. From mathematics, right? I'm just taking a wild guess of, and look, when you have an account and everything's a wild guess on how much of your account is at risk or what you're going to lose, or you don't even know. I see this in cryptocurrency with my students, some of my older students all the time, that came, before they came to me, right? They were just hodling things. Some asshole tells them to buy. I mean, there's so many shitty cryptos like Lisk, right? Big shitty. There's Lisk and there's all these shitty, like really crappy cryptocurrency coins out there. And there's like so many people that are just stuck in these bad boys and they just hold, right? They just hold and they hold and hold. And what happens is like when you're holding and holding, it never changes. You never get back to where you were, so we always have to be using stop losses and then really managing our risk because you never get that money back. Yeah, Dennis, you can. So how this would work is if you had a $10,000 account, you're looking to risk $100 on a trade, you would short 330 shares, right? As you would take your $100 risk per trade and divide it by the amount of shares you're risking per trade, 30 cents, where your stop loss is. Now, if you had a smaller account, say a $2,000, $3,000 account, you may want to do 2% risk per trade, right? I'm doing 1% risk per trade because I have a bigger account and, so if I'm doing XYZ, it just fits my style. So like, for example, if you're trading $40,000 and you have 1% risk, your total risk would be $400. Okay. So say I buy something at $10. All right. And my stop loss, I got the wrong one again. Hold on. There we go. So I got $40,000. My risk is 400. So now what's going to happen is, say I buy something at $10. My stop loss is at $9. That's my risk. So I'm risking, 10% stop loss. What that means is I'd have 400 shares, a $4,000 position, and I'd have $4,000 risk. Make sense? Because that's 1% risk, 400 on a $40,000 account. Now, look what happens. In trading, this is the beauty of trading. You get rewarded for having really good entries and managing your risk. You get rewarded for it, meaning that when you can do it, what'll happen is when you can do it and you get really good entries and you wait for those 9 EMA curls for the girls on top of it, say your risk is 50 cents on it because you got a really tight pattern. Now look, you get to double the amount of shares you have, right? So double the shares means you can make more money. Now you'd have $8,000 in the position, but your risk is still $400. Pretty cool, right? Now, right, what if you had a really, really good entry and, right, your stop loss at 975? Look at that. That's 1,600 shares of this bad boy, but your risk is still $400. Dun-dun-dun-dun. You guys see what I'm getting at? What if you had a 990 stop loss? See that? You're going to have a good chunk of your account into the trade, but you still only have $400 risk. We choose our risk. Where we buy and then where we put our stop loss is essentially our risk. And so we want to always be mindful of that, right? That's our risk. And so we've got to always kind of keep that in mind. Like we've got to come in and say, man, I've got X amount of risk on this trade and I can have this much size. So you got to come in with this kind of mathematics, and it's not complicated, but it's going to be really important. Now, if you had a $10,000 account, a 1% risk is $100, right? So if you have a 980 stop loss, you're going to have 500 shares. This is going to be really, really important. I'll tell you a story. So I had a student of mine, Rick. This guy bought 1,000 damn shares of everything. Shit you not. 1,000 shares of everything. And man, he bought 1,000 shares of everything. I tell him, like, why do you keep buying 1,000 shares? Because we grade our students' trades in our 60-day boot camp. So like all my students, they have, they send me like their Evernote journals and, that kind of stuff. And so like I can see everybody's trade. So, we go through their trades and I'll be able to see like everybody, I can see like everybody's all sorts of stuff that they do. So I got like pages and pages of their damn booklets and all that kind of stuff. So like I'll see all this stuff. So when I see the trades, I say, damn, like you're buying 1,000 shares of everything. I'm like, why? So it's easy calculation. I make money like that. I'm like, yeah, you're making some money, but not a lot. And so I was having trouble, right, getting into his head like that's not the right way to do it. So he asked why. I say, well, we want to have more shares when we have low risk opportunity, that's high probability, and less shares when the risk is high. Why? We want to have a lot of shares when we have the home run trade, right? And we want to have a lot less shares when we have a really risky trade. That's real betting right there, right? That's real betting when you're playing the odds like that. So I say, if you buy 1,000 shares of everything, then when you have some shitty trade that you don't feel that good about, you're going to have 1,000 shares. He's like, yeah. I go, when you are in love with this trade, like it's got all the right parameters. Remember, we're lawyers. We're building a case. So I say, you build this case, this hot, beautiful case. You're about to send this girl to the slammer. You can still have 1,000 shares? He's like, yeah. So, all right. So I made him a bet. I said, look, let's go through our trades. We match each other. Every single buy and sell, we do the same. So if I buy at 507, you buy at 507, I sell at 502, you buy at 502. Same entries and exits on every single trade for the month. He goes, okay, cool. I can double your gains by sizing it properly. When I see the case and I built one, I'm going to size it the way it needs to be sized, and you just do 1,000 shares. It's like, all right, I'm going to double your gains. 1 month, double your gains. It's a lot of money to double somebody's gains. So he says, okay, and it was literally almost to the dot. I was able to double the gains. Now what happens, and you know why? Over the course of the month, we take 100 trades, so let's say 100, 200 trades. Well, 5 or 10 of them are going to be home runs. Like, larger percentage gains. Well, if I have 5,000 shares in those, if I have 5,000 shares in that home run trade, and he has 1,000, how much more money did I make? A lot more than just double now. But what about the disaster trades, the ones that don't go so well? Well, I'll have really small risk, less size, because I'm using the position sizing calculator properly. And then I have some caveats to this based on probabilities also. But he'll just have 1,000. So the nasty trade, he's going to have 1,000 shares. The nasty trade for me, I might have 100 or 200 shares. So see, now what happens is all of a sudden, even though we got all the same entries and exits, the tide has changed. And boy, it's a nasty tide. So it becomes very important. Now, the only other aspect of position sizing, and this is way down the line for you guys, this is more on my side of things, or some of my students that have been with me for a while, 3-4 months after that, they'll probably do it this way. Over time, you will have data on every type of trade that you do. You have data on every type of trade that you do. Hard data. So like all my students, they have data on everything. Yep, all the position sizes, sheeting, everything. There's nothing I have that's not available. There's nothing I have that's not available. But so like my guys have data on everything. So like you could see like this Mr. Bumps, he's got like, I could see like, all right, all his trades here. He's got data on literally everything. So 1,500 trades, $351,000 he's made. But like he's got a couple trades that get him in trouble all the time. So he lost 45 G's on this one. And he's had, vice versa. He's had $100,000 trades and stuff like that. But we keep data on like literally everything. So then what happens is like over time, we can come in and say like run reports on anything, right? So we can run reports on like anything from like any different time frame or anything like that. So I can run a report saying like, okay, from September 1st to December 31st, we want to see how you trade this type of pattern or this type of pattern. So then what's going to happen is like you'll start building out a whole different subset of things. So like you'll start to see different statistics on like different stuff that you do. Like what's the total gain versus loss? What's the average gain? What are your winning percentages? Average winning trade, average losing trade, standard deviations, largest gain, largest losses, all different types of stuff, market behavior, instruments. This is really, this type of data is really important. If you can deal from a position of mathematics, then what we can do is we can deal with facts. See, when somebody comes to me and says, man, I'm having trouble trading, and I say, well, let's look at the math. Let's look at the total P&Ls. Then let's look at the drawdowns, like, periods where you're starting to lose money versus, gain money and different things like that. And what we can start to do is really build out, we can build out systems and processes to fix things, okay? And that's going to be just like the most important thing to do. And, so having the data is going to be really, really important because, dude, you've got to have it. So then when you're like, man, I'm struggling, you have the data that says it. And then what happens is once you have the data, you can add position size to it or add risk. So like I have certain trades where I might say, man, I do really well on this trade, so I'm going to risk 2% of my account on the trade. And I have other ones like rubber band setups. I might say, you know what, I suck at this one, but the setup is really good. I just don't trade it well. I'm going to do 0.5% and reduce. And so those are things that you'll have to really think about, in the market. The one thing is when the market gets really volatile too, cut your risk per trade a little bit. That's going to be huge when you go in with this thing. So remember to take your profits as stocks can really reverse fast in this kind of market. Guys, if I'm going to open this thing up and we'll run out the contest and stuff like that also in a hot second. I got this random generator thing for all the people that are in here. If you're looking for more advanced stuff, this is what we do. My class is 60 days long. I have 18 different setups. I teach it just like this live. I got 18 different setups. The thing about class is we teach long-term trading, swing trading, part-time trading. We spend 5 days on that. So that's about 10, 12 hours just on part-time trading, longer-term trading. Then we have weeks of day trading too. You can't learn how to day trade till you learn how to go longer term. You can't learn how to day trade till you know how to do longer term, because your best day trades come from longer term types of trades, okay? So you've got to learn both. Now, no matter where you guys learn how to trade, it doesn't matter, right? YouTube, different classes, whatever. It's very important that you have a proper structure around your class. This is no different than any job. High stakes, high pressure job requires mentorship, feedback, right? Community, those type of things. You can't learn how to handle this kind of heat and move this fast like a ninja from DVDs, from YouTube videos, from books. Can't be done. It can be done. I did it. Took me 6 years. It can be done. Took me 6 years. Then I met my mentor, Paul. It took him like 10 days. It took him like 10 days. He's like, dude, you got all this knowledge. So this is what happened. I was learning a lot of knowledge from people. I was reading books, talking to people. I was taking knowledge. But all this just random floating knowledge in my head. I was going, guru to guru, book to book, right? Style to style. And trying to turn that into something, a system, doesn't really work like that. You know what I mean? When I met Paul, my mentor, who works for us now, he does some of the classes, my own mentor. When I met Paul, he's like, shit. He's like, you know a lot of stuff. I'm like, yeah, I do. I'm just not very good at it. He goes, but you don't know anything about trading. I'm like, damn. What have I been doing all this years? He goes, Canal, trading is methodology. It's something you can repeat over and over and over for the rest of your life. I'm like, oh, shit. So how you want to think about trading, guys, this is how trading is. Think about a cookbook. You ever read inside a cookbook? You've got a recipe for meatloaf. You got a recipe for meatloaf, and you're in this Big Mama's cookbook, right? So you're in Big Mama's Southern style cookbook, and you want to make some meatloaf. Well, it doesn't just say make meatloaf, right? There's all the ingredients you need. So a trade has ingredients too. What are all the different things you need in your trade? Then it's going to list every single order on how to make that meatloaf, right? Heat your oven to this, mix with this, put a little sauce in this, get this pan, use some butter, use some Crisco, mix it all together, roll it up in some dough, throw some paprika on that thing, and bam, you've got yourself some meatloaf. But it's very specific, right? So you got your ingredients, and then you've got the orders you've got to put it into. But if you're missing a piece of that recipe, all of a sudden your meatloaf becomes a hot dog or whatever it might be. It's not meatloaf anymore. A trade is the same way. If you are missing a piece of the puzzle of your trade, that trade usually turns into a loss. So you've got to go in with a recipe for each type of trade. Then it's practice, 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 building muscle memory, expertise, which leads to competence over time. So we do 28 live classes via webinar, 8 p.m. Eastern time, Harsh. Eastern time, baby, no mountain times. Eastern time. Every single class is recorded. It is archived for life, so you can watch it. Our students can retake class as many times as they want. They can come in any damn webinar they want. And we start everybody off from the beginning, okay? So like this is our bootcamp module page. So like all your quizzes, your homework, your forums, everything is on one page. So it's really easy to navigate. And every single class, even in the last bootcamp, you can start learning it. And then all the resources you need is all there. Now look, this is all fine. This is just a website. But in the end, this is all recording. I come on stage and I do this thing live every day, 4 days a week. Sundays, Tuesdays, Wednesdays, Thursdays. The good thing with our boot camp, you can even go and watch boot camp from 2014. You want to see some old stuff? You want to see when I had just a little bit of hair? You can come in there a little bit skinnier. You can come and see all the different stages of the Canal de Sable. And then we have flashcards and checklists and anything you can think of in this page. And it's fun. And you get lifetime access. You can retake live class as many times as you want. We have a Q&A session at the end of every class, quizzes, homework, all that fun stuff. But this is the important part about trading. And any trading that you do, any type of class, make sure you get this part. Once you have your book knowledge, your class knowledge, you can use any broker and software you want, by the way. My scans can be, you can just write them down and upload them into whatever you use. This is the most important part of trading wherever you learn how to trade. You have your book knowledge. So say you're going to med school. You want to be a heart surgeon. You read all these books. You're not opening any hearts right away, are you? You've got to go out. How do you go from that, reading a book, to do an open heart surgery? First, you got to read the book. Then you got to watch it, right? You got to watch somebody else do it. You got to literally go in the hospital, watch somebody else do it. Then you got to go out and practice. And then after you do all of that for years and years and years, right, you're going to go out and do it in real life. Well, we don't have that type of time in trading. But what we do is after class is done, for 3 months, I trade in front of my guys live. I trade in front of my guys in chat room. So I go to webinar, and we come in. I put a GoToWebinar link in, and there's some other good traders in our chat room. I trade in front of them live. You've got to be able to see it live. You've got to see it moving around on screen share. I have my trading platform up. You can see the buttons. How do you hit these damn buttons, right, everybody? That's always a question. How do I hit the buttons? Well, you can see how to hit the buttons. Very, very important to see that part. So you can connect the dots. Take the static knowledge of book, connect it to real life. Now you're ready to go. Once that's done, we do market recaps. So after I'm done trading, I go on and I recap every trade I did. I get my profit and loss out. Hey, I made $500, $1,000, lost $2,000, whatever it might be. How did we get there? How did I find the stock? Why did we enter here, there, so on and so forth? Now we're ready to go. Guys, that market recap is gold. And you can go back through the market recaps for all our past boot camps. So you can literally see me reverse engineer all these trades, which is huge. You can go through thousands of trades I've taken and start reverse engineering them to get this thing going. All right? Now, from there, we go personalized trade plans. Every trader is a little bit individual. We have a trading simulator that we use with TC2000. On TC2000, once I get you my scans and my layouts, right, we just go and add a practice trading account, and boom. Like you can start buying and selling right from this platform on a simulator. And I'll show you how to set it all up and all that fun stuff. But now it's awesome because we're using from day one, we can use this software in class. And then from there, guess what's going to happen? 64.5, Casey. From there, what we need to do is now you're going to be using this software. Then you're going to be on the simulator with it. I've been using this thing for a decade. So it's like almost like a bionic part of your body, right? And I don't trade from TC2000, the broker. I just use it for my charting. But you can trade from there if you want. Lifetime access. Access to private student community. So beyond my 28 live classes, I have students of mine, guest students, on top of this, do webinars all the time. Dennis the Menace, Taylor Jordan, you guys probably see him online. He runs the Shred Lounge. He's a fantastic trader. Jake, man, I've got 5 or 6 of my students, like a Green Bar and some of these guys. They own their own websites. They're competitors of mine, but friends, right? So many of my students have opened their own businesses like that. So it's pretty cool. Comes with a 200-page trading course book. That's the hot stuff. That is the hot stuff. For the first 5 people, we'll give them early bird pricing plus 3 months access to the chat room. We do have payment plans available. It's $2,100 for the early bird. I believe it's $28. Our regular price is $28.50, give or take. Don't quote me on it. I think it is $28.50 though. That's our regular pricing. So, you can come in with, any of that stuff. Regular price, early bird. So for the first 5 people, we'll give early bird pricing to. If you just want to get cool. Phil, I got you. If you want to get, early bird pricing, just put your name, and just your phone number and email. I'll have Omar give you a call, or I might call you myself, depending on the schedule. And I'll walk you through the boot camp and all that fun stuff. So anybody that's interested in early bird pricing, just put your phone number, your email, and I'll have Omar. Omar. So my buddy Omar changed his name at the age of 30 to Omer. He just randomly told us his name was Omer all of a sudden. So we'll have Omer or Omer. You can call him. We'll come in and get that going. So guys, class is at 8 p.m. Eastern time. The live trading is, of course, just during the trading day. So as I'm trading, we can go. There are ways to practice after hours too. So like, look, if you have a job, I started trading and quit my job while I was trading at my job. It's called swing trading. So I wasn't day trading all day. I was doing longer term trades, 2 to 10 day type of trades, going for 10, 20, 30% type gains. So just longer trades. And I built my account up like that so that I was able to finally quit my job. So you don't have to day trade to be able to do this. You can do swing trading and then day trade when you have time. And we teach both. I started this business as a swing trader doing multi-day trades. And so if you guys got work, you can't sit there in front of the computer, that's totally cool. That's my specialty, part-time trading. So that's going to be really, really important. If you want to just practice, simulator practice, like after hours, there are what's called market replay simulators, like Thinkorswim is a market replay simulator, and that can be used. There's another one that one of my students actually made called TradingSim.com, where you can practice trading at night. You can like rewind a market day. This one costs money. The Thinkorswim one is free, but this is one of my students, and he's pretty good. His name is Kunal too, so that's kind of cool. His name's Kunal, my name's Kunal. So just right there, I mean, I got to kind of pump them up. So this does a market replay of functionality. Also, guys, if you guys need referrals or just want to talk to some of our other students, I will definitely get you in touch with whoever you want. You want somebody local in your area? I know everybody. I've had students from all over the world. Currently, Europe and all that stuff. Interactive Brokers is the best broker out of the retail brokers. The students of mine that do not trade at our hedge fund, they mostly trade at Interactive Brokers. They've got the best shorts and all that fun stuff. Guys, you get lifetime access to this stuff. Markets are ever changing. In my class, I'll have students from 5 years ago go, because the one thing that's always certain is Sundays, Tuesdays, Wednesdays, Thursdays, we do class. That's going to be, it always happens like that. So you guys, you let me know if you just, want to chat with anybody or you want to ever talk with anybody. I will get that thing going. Guys, trading, let me just kind of round this out before we start the AMA. When we talk about trading, it is something that's hard because you have complete control over trading. When you win or lose and it's your own fault, it's super stressful because at work, you can always blame somebody else, right? You can blame your boss. He's a dick. You can blame the guy in the cubicle right next to you. He's a dick, right? Everybody's a dick. Everybody's slowing you down in the workplace. I used to do it all the time. I didn't get my promotion because the guy next to me screwed up our project, right? Or whatever it might be. In trading, we don't have that. Trading can be damn depressing because when we screw up, when we screw up, it's our own fault. And that's depressing. But that's also the awesomest part is that when you screw up, it is something that's fixable. It's up to us. It's up to us to get that thing going. And so when we make money, we lose money, that's on us. And that's a pretty cool thing, no matter where you are. To not have your boss control your income, not have Bob the Bear next to you, right? Creeping over the cubicle, right? Controlling your income and screwing up all your projects. That's pretty cool. But also that puts a lot of pressure on. But trading is something, whether you day trade or not, it's something you're going to have to learn, because you're going to have retirement accounts, 401ks. Those are all things that run on trends too. And like, if you ever want to like retire early, or, you know, really take control of your own like longer term investments, right? Your financial advisor most likely is also not that good. I have a financial advisor, one of the best in the country. You know what he really, his main business is? He's always trying to sell me stuff. Say, Claudia, you're the best in the country. What you do? He's like, I am. Yeah, you were highly recommended to me by numerous people. What do you do? He's like, well, I want to put you in these mutual funds. I go, I am a trader. He goes, I know. I just figured I'd ask. I go, so what does he do? He puts people in mutual funds. He gets a rip off of them. Then he sells people insurance. He's like, man, you need disability. I'm like, all right. You need life insurance. I'm like, all right. Right? You need this insurance. I'm like, all right. That's how he gets paid. Your financial advisors get paid off growing your retirement account. It doesn't work. And if you look at any study, when you invest in mutual funds or anything that has fees, like those big 401k fees, over the course of decades, those fees, they also start to add up, right? They go exponential also. So they start compounding. Fees are also a compounding interest. And so over time, they really sap out all the gains in your account. And so like, if you think you're making 10% on your account a year, once the fees and taxes are done, it might be 5 or 6. Well, that's not enough, right? But if you can get that thing to 15 or 20, you're going to retire way before you would otherwise, because your returns are so much magnified. You might be retiring at 50 instead of 70 if you could get that right. So it's important that we all, whether we want to be day traders or not, take control over our finances and away from them greasy financial advisors. Oh, just selling you insurance anyways. I got so much insurance, it's crazy. I'm like, what do I need all this for? My guys, I was like, I don't know, man. Darian, man, look at this. Of course I'm exercisations, man. Look at this bodice of mine every day. Every day. But I also go for a walk on the beach for at least 3-4 miles every day in the morning. And then, yeah, I go lift weights around noon every day. And then we're always playing sports. I got a basketball hoop at the house. Me and the boys are always rummaging around, beating each other up on the basketball hoop. Got to do it. Look, working out is awful, but if you do a good chunk of your working out, like in sports, and then like beach stuff, it's not so bad. Like I go play volleyball, man. Fucking sand volleyball, beach volleyball is tiring, you know. And then you know, you play a little basketball, and then you lift a little weights, you're good to go. That's I don't like doing regular cardio. You're never gonna catch me sitting inside on a treadmill. Like, you know, a man needs to get out there and get some sun. Hot damn. Hey, Christina. By the way, those setups that we do, those are bear market setups. It's called shorting. That's what you do. Yeah, I see it, Kevin. The question is, do you see it? Yeah, man, Darian, you don't want to be on that treadmill. Christine, I'm not sure I understand your question. Could you extrapolate on it? Now, guys, what degree did you graduate at Michigan State? I had a communications degree. Look, I was what you'd call a super senior. So there's super seniors, and then there's like a super senior. Hot damn. What else? What else? Hey, Sajel, how are you? And guys, if I missed your question, it's just because they came in too fast. So if I missed it, just let me know again. I apologize. When you get a couple hundred people in a webinar, man, you'd be surprised at all the bitching and moaning that goes on, right? Like, where's this? Where's that? I just try to get through them one by one. Can you explain how the hedge fund works? Our hedge fund is open to anybody that has completed our trading boot camp. It's not open to outside people. It's just funded by me. The buying power is funded by me. I'm a big believer in trading. It takes there's a window of screen time that you need to get good. So I've set up my hedge fund in a way where we put like max losses on our students so you don't blow up their accounts. They can lose like, say, a couple $100 a day. We charge 27 cents for 100 shares and for commission. So the rates are the cheapest. Guys, if you want a day trade, you have to have a per share broker, meaning if you trade one share, you only get charged for that one share. So if you trade one share of something hypothetically, you don't get charged $5, you get charged 2 pennies. If you trade 10 shares, you get charged, right, 3 pennies, right? If you trade 100 shares, you get charged 20 cents, so on and so forth. You don't want to pay $5 per trade, you'll go broke. Ashutosh, what's up, baby? Question is the stop loss that necessary in case of a day trade? Yeah, because if it goes against you, you can lose a lot fast, and that's, I think, going to be one of the most important things. Guys, we've got to go in with always managing our risk. Yeah, Todd, that's actually one of my disciples. I'm the granddaddy of all this. But look, one of the things that ours is set up like, Todd, is it's university style, right? It's based on live classes, live trading. But the other thing, Todd, is that I don't trade like low float, $1, $2 things and try to spike them up in my chat room or anything like that. We trade really all different types of trading. I might trade $2, $3 stocks. I might trade a $2,000 stock if I had to. I trade Bitcoin. I trade Ethereum. We trade cryptocurrency. The stuff that we learn, Todd, you can use anywhere. But it's live classes, then it's chat room, and then it's about not just like, oh, I just trade the open and I do this one pattern or whatever. We're going to learn 18 different patterns that you can use in any type of market, bull market, bear market, beginning day, end of the day. And then we learn how to trade all different types of stocks. And I'm pretty much 50-50. I short just as much as I go long. My ratio is about 50-50. So I'm always making money both ways. And then I'm also 50-50 in stocks and cryptocurrency. So like I'm always, wherever the action is, that's where I'm going to go. Hey, Kevin, yeah, you can, and look, if you need to stay in the chat room, Kevin, like an extra month or two, dude, you just, you just let me know. I'm not a stickler for like those type of details. Todd, yeah, we spend 5 days on swing trading in our class. So Paul does them, my mentor, Paul. He's a full-time trader, but he does it from swing trading. So he's really good. So, he does class with us also. Kevin, guys, a bunch of people have asked about taxes. Guys, if you're working at a company, you're going to pay taxes. If you're trading and you make money, you're going to pay taxes. There's some small things, of course, that you can do to lower your tax bill a little bit. Just like when you're working, and you have kids or something, you could take a couple deductions. Yeah, when you're trading and you have a trading business, you can take a couple deductions. But in the end, you're never going to get your taxes from 30% to 5% or something like that. This is America. This is the greatest country in the history of the world. And in the end, we pay the taxes. You're never going to get totally around them. You bite the bullet. That's what I always do. I always say that I'm going to pay 35-40% in taxes. And then if it's something better than that, it's a gift. Oh, Todd, yeah. So we have weeks of dates. Out of 28 classes, 5 are swing trading. The rest is geared towards my style of trading. Hey, Jonathan, how can I tell if the stock is continuing down or reversing after consolidation? It would depend on the overall picture of the pattern, depending on what its daily chart's looking like, what the volume pattern's looking like, and also which way the EMAs are curling. That'll give you a good sign of, what you're looking at. That's why I want that 9 EMA curling right on top of it. Can I trade in the U.S. stock market from India? Yes. There are brokers like Interactive Brokers that'll let you do it. And also I have some personally through my own software fund, there are some ways you can trade with us too. Adam, I mean, Cameron's one of my best friends. He's an Instagram star. He trades a little bit, but I'm a trader. I trade all day and night for the most part. I may only trade the open of the stock market, but I'm up trading cryptos. I trade futures. I'm the trader. So it's a little bit different. Hey, yes, Cameron, he'll tell you the same thing. Cam is awesome. He's one of my best friends. He's a lot better looking than me and has got 6-pack abs, but I'm a lot better trader than he is and a lot funnier. So those are the only differences between us. He's got the abs. I got the funniness. He's got a better Instagram, but I got more money. Hey, Jimmy, how you doing? Do you use the MACD as well in your trading? No, I don't. And the reason why, Jimmy, is that we use the stochastics, and it's they're kind of similar. There's an overlap in them. Anybody else got any questions? Oh, Daniel, how you doing? Stop loss versus stop limit. I use a regular stop market. Hey, Christina, good. So to get into shorting, and Christina, by the way, just email me if you have any questions, if it gets confusing. Hold on here. Let me just put my email somewhere. I'll just send it in this thing. Hold on. So, Christina, you need to short. You need to be able to have a margin account. So you got to enable the margin on your day trading, on your trading account. Enable the margin. And once you have margin, that's when you can sell shorts. I think you need $2,000 to margin. For those of you guys that have smaller accounts, we'll do some stock trading, but also, the cryptos is really good for growing small accounts just because you have when the market's hot, you get this kind of volatility. So, we'll be mixing and matching those kind of things both ways. And there's a lot of these kind of cryptos that are really down cheap right now that, might be 10 baggers. Yeah, Jonathan, it does. Good. Adam, are most of your entries and exits market orders? I actually have in my platform built in a market limit order, which is like kind of a combo. It's a market order with a limit on it of just 2 pennies above the ask. That way I don't get smoked out on the entry. That's something my own guys programmed into it, but it works pretty well. Jose, good question. Great question. How long did it take you to be a profitable trader? Years. I would say to be really consistent day in and day out, 5 years. Now, granted, I didn't have a mentor for any of it till year 5, and so that was the thing was, I didn't meet Paul till way after the fact, Way after the fact. I wish I'd met him a few years earlier. Saved me a lot of losses. Now, I will say that once I met Paul, that same year I got really consistent. Having the mentor to beat me up, having the mentor like beating me up and just always chatting with me. I used to, I send him my trade journals, and my students do the same thing. Now, like, we have trade journals and stuff like that. So like my guys are always posted. This guy, one of my suits, Henrik, he wrote his trade journal in Finlandish. Is that the word? Finlandish? Finnish? He's like, I'm like, man, I think this is in Finnish today. So yeah, all our guys send like the trade journals and stuff like that too. Robinhood's a good account for new traders for sure. Christina, good question. Christina says, how long can it take people to mentor? The variable is not really the mentorship. The variable is the person. You get 10 people in a room, 2 are going to be really hardworking, 2 are going to be semi-hardworking, 2 are going to just fall off the face of the earth, and 2 are going to be dabblers. That's kind of always the thing that I've kind of gathered around trading is that's the part that is hard to, it's subjective, Also, a person's resiliency. A lot of times I get students that are really hardworking in the beginning. Man, they're all gung-ho. They study everything. They do everything the right way. But then they start trading. They run into difficulty because it's all new still and they're learning. And then they just they fold, right? And then there are other people that really keep grinding at it. Like, all right, I suck, but like I'm going to keep working at this. Versus, when they're hit with a little adversity, they fold. And so those are the interpersonal things that, really create a lot of variables that could take somebody from, say, 3 to 4 months to 3 to 4 years. I'm stubborn like that too. If I hadn't had Paul knock some sense into me, I don't know, I wouldn't really be standing here. Now, the good part is that once he knocked some sense into me, I was able to do it. My business partner, Mary Beth, was probably my quickest success. Girls learn fast. I don't know if that's the right way to put it. They lack that thing that guys do that always gets us in trouble, the macho ego-ness, that kind of stubbornness. Girl traders don't usually have that. So they have a different learning curve than guys. I mean, guys are stubborn. She's very analytical too. So like, she's like always, she's good with budgets and she's a mom now. So she's just, she learned quicker. She's smart. Man, damn, she's smart. So she was actually probably the quickest. And I hired her. I mean, if you're good, I'm going to end up hiring you. Good. I hope so, man. I would like to tone things down and have some new blood in. That'd be awesome. Yeah, she actually Mary Beth came to me right out of college, actually. So she had an engineering degree, and then, she came to me right after college. It was like, man, she must have been 23, 24, something like that. She is a biomedical engineering student. Hey, Zach, if you're trading on 5 minutes, I wouldn't switch back and forth between 1 minute and 2 minutes. I mean, you could, but, man, you got to have some real skills on that. Oh, yeah, you got the 9 EMA tap on that, so that's where you're getting that kind of action from. I didn't even see that. I had an alert set, too, little sucker. Looks pretty good. Hey, Daniel, it's never too late to start anything. No, Jason, you don't. I don't believe so. Don't quote me on it, but I haven't heard that from any of other chat room students. Hey, Steesma, is this going to be the play for next week, for this week? Jacob, I like it. Man, you and your maybes. How come you never get? I want you to tell me when to buy. This is going to be now Brian Steesma day. You're going to be telling us when to do everything. How are you going to say maybe and then say you're already in it? That's messed up. I think if you put a stop at 780, you could really swing this thing. That's still, that's way too loose, isn't it? Yeah, you're going to get a little bit cheaper. Good. Anybody else? Oh, contest. Contest. Let me get the numbers from Josh here. Cryptocurrency chat room. Cryptocurrency chat room. Dun, 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 dun. Josh, what do we got? Mr. Jimmy Acosta. Cryptocurrency chat room. Number 2. Dun, 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 dun. And just email me when you hear your name, and I'll get you all set up. Mr. Costa, cryptocurrency chat room. Dun, 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 dun. All right, cool. Second cryptocurrency chat room. Jonathan. Whoever that, so that'd be STRM001. Message me. Dun, 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 dun. Okay. The boot camp winner. Kevin 1010. Good. Kevin 1010, hit me in. Kevin 1010, message me on that boot camp. So we got boot camp winner. John, Jimmy, you guys message me. And we will get you all set up. So Jimmy, give me till tomorrow. I'll make sure you guys are all set up. The boot camp winner, I need your address. I'll be mailing you a course book. It's big. It's like thick like a Bible. So I'll need your address. It's physical. All right. Guys, it's been real. It's been fun. It's been fast. By the way, guys, don't hesitate to, email me. If you guys got any questions, that's my number. Try not to blow that thing up with 30 picks because it's my personal cell. Dun, 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 dun. Zach, I'll put it on the YouTube and make sure to email it out to everybody. And guys, I had a lot of fun. I really appreciate you guys, putting up with my shit for a couple hours. I know that I'm a little bit verbose, but I really like talking about trading. I don't know how to tone it down. All right, cool, guys. I love you guys. I really appreciate, man, I know you guys got a lot of probably things you want to do with your lives rather than sit around at nighttime listening to me. So God bless you all. God bless the United States of America. And pray for the crypto markets to explode because I got some tickers I got to get rid of. I love you guys. Peace.